Okay, guys, and welcome back to Basics. We are one, maybe two lessons away from actually getting these people trading in our new paper trading module that we're releasing very soon. Again, if you're new to this, we are teaching about trading to people that work with trade ideas but aren't traders from the absolute beginning to the absolute end. You guys are showing up somewhere in the middle, so there'll be a playlist on the tradeIdeas.com website and on YouTube that you can watch it the whole way through. I suggest doing it. Just it gets from what is a stock, technical, statistical, fundamental analysis, now into trading, and it will be kind of a building a trading plan, reviewing that trading plan. So, all right. So today we are going to probably have a pretty short one, but what we're going to go through is a simple trading checklist. So in the last few weeks, we talked about the system and how it was used and how to place orders, which will go more in depth when this is the module is finished. Last week, we went through order types. So again, if there's any questions about what I'm about to go over or last week, just interrupt me at any time. So, you know, being the last step or two before actual trading, I thought it would make sense to give you guys a very basic rudimentary trading plan and a checklist for every trade. So there's a really great book out there for the readers called the Checklist Manifesto. Big summary. Guy was trying to figure out why the wealth of the country and the amount of deaths in surgery didn't make sense. You would assume that the more wealthy the country, the less deaths in surgery because of mistakes. Anyway, he went all the way down through and found out that just like in flying and a whole bunch of industries, it came down to their checklist. Did they have something to review to say, okay, did I do this? Did I do this? Do I this? Okay, then go. As opposed to people just kind of trying to make up things on the fly and missing a lot of steps in that step causing all these problems. So again, I wanted to design just something simple to have you guys go and say, okay, is the stock doing this, 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 and this? Okay, take the trade. So the first step of this, and something that's super common in trading, is a top-down analysis. So just bullet points here. But it's 80% of all stocks follow the market, give or take, right? So if the market is doing well, most stocks will be dragged with it. And if the market's doing poorly, most stocks will be dragged down with it. So generally what people will try to do is try to get a good feel of the market in general, knowing that that's going to carry some of their trades. Now, you know, just because 80% of stocks follow the market doesn't mean they'll follow them as much, right? So part of your job as traders is to, judge directions, and then part of it's to judge outperformance. So, you know, if the SPY is going to go up 1% and you think so, you're not going to want to find a stock that you think is also going to go up 1%, because that doesn't really give you any edge over the market, right? You're looking for the stock that you think, if the SPY is going to go down, this one's going to go down less. And if the SPY is going to go up, this one's going to go up more. So a relative strength and a relative weakness type of environment. So the first step, I think, to every trade is to sit and look at the SPY and just judge it by your eye, right? Just quickly look at and see what you think may happen next in the market. Again, when we talk about risk management, you'll see why, but this game is all about inches, right? It's about like 1/10 of 1% when it comes to how accurate your trades are. The best out there of traders are right 60% of the time, right? So we'll talk about that in a bit. So all of these are not any sort of, holy grail. It's about how to eke that little bit out of the market. So if we go here to your guys's trading platform and you type in SPY, SPY, this is when people say the market, this is what they're talking about. Essentially, the SPY is a collection of 500 stocks in the market, weighted and rebalanced every now and then. It's a lot of details you don't need to know too much about right now, but basically this is what they're talking about when they're talking about the market, right? Because you take 500 stocks and you put them together. That's a pretty good statistical sample of what everything is doing. So step one would be to go in here and take a look around, right? What is it that you see? What is it that you think is going to happen next? Again, I don't expect you guys to have any clue. right? I don't expect, this is what's going to happen as you guys play, but just this is kind of step one. So this week, for example, we had, a hell of a sell off. And then today we had a pretty crazy bounce, right? It's been a very volatile market. There's a lot of stuff going on in the news down there. I'm from Canada, so US always down there. But yeah, so you may look at this, and myself as a trader would look at this and say, okay, this is a kind of crazy volatile market right now. Big drop downs, big pops up. That may lead me to believe that I should be trading something that stocks that held up well during the sell-off. And then if we're going to bounce, those are probably the ones that are going to perform the best, right? If when everybody was selling, these stocks were able to hold themselves up while everything else was selling off, then it makes more of a higher probability that if the market turns, then these stocks are going to go up, right? So just a simple, again, don't really worry about that statement, but how I formulated it, right? So I just looked at the market, I kind of observed what was happening the last week, and then kind of thought about what may happen if something else happens, right? So that's your kind of top-down analysis. That's the way that you get into, here we go, you get into how to think about that. And again, don't spend too much time on it because you're not going to be trading the SPY. You just want to look at it every day and say, okay, this is what happened to the market. This is what I may think may happen over whatever your time horizon is, which is going to be like a couple days to a week. All right, and then next is trend. So for now, I'm going to have you guys trading with the trend. So we did a whole lesson on trend and how to define it with, when it makes lows, it's making higher lows. And when it makes highs, it's making higher highs. And that's how you define a trend. The reason we do this is because there's been a lot of statistical evidence to show stocks that are strong generally tend to stay strong, and stocks that are weak generally tend to stay weak. So it makes it just a little bit of kind of generic statistics are on your side when you're trading with what the trend is. And it should be pretty easy to see, right? And so I put some ways to define it, and we'll go in, we'll take a quick look at those now. So, right, this should be fairly obvious to a lot, but if you look at Netflix and you just bring that up, right? Uptrend or downtrend? Anyone? Downtrend, right? You don't, it's one of those, it's like, I know it when I see it type of thing. Like, you don't need a lot of definitions, but if you do and it helps, this red line that I put on is the 20-day moving average. We talked about indicators of moving average and how then in of themselves don't have a lot of value, but they're helpful to define rules. So one of the rules you may develop is say, okay, if the 20-day moving average is pointing down, I'm going to consider that in a downtrend, which means if I'm looking to trade this stock, it will be selling short, right? Apple, right? Uptrend, obviously, right? So red line is pointing up. So you'd say, if I'm looking to trade Apple, it's going to be from the long side, right? Just teaching you how to put these things together just to make a kind of a specific type plan. And then this is kind of last, but most vehemently important, is risk, right? So again, I said it before, the best traders on earth are right 60% of the time. And that might mean they make $1 or they make $100,000 on a trade, but it just means that they were slightly right 60% of the time, right? Doesn't mean every trade of that 60% is good, and these are the numbers. And I'll just say, anyone who's my guru is right 90% of the time, no. Run. No, he's not. Even Holly, our AI, is right, I believe, 55 to 57% of the time, and beats the hell out of the market average. And it does it with risk management. So basically, right, if you're right 40% of the time, or right 60% of the time, you're wrong 40. So for every 10 trades you're going to make, 4 of them are going to lose money, right? And the sooner that you just grasp that and just been like, it's going to happen, there's nothing I can do about it, the better you'll be. So you must have a plan to lose less when you're wrong than make when you're right. That's, if there is a holy grail to trading, that's it. So I put a math equation here, but don't worry, I won't test you on it. But you should shoot for 2-to-1 risk reward. So it means what you think you can make should be about twice as much as what you're willing to lose on the trade, right? And we're going to go through, what was the last one? The last one's just the checklist in total. So essentially, we go, come on, there we go. So let's take Apple, for example. You should look at it and you should say, you plan the trade in these steps. And this is what, you may need to review this, but this is how I want you guys to plan every single trade. And this is the only thing that I'm like, this is super important on, is you simply look at where you believe your entry will be, right? So I'm going to buy this at $221 a share, right? Then you say, okay, where am I wrong, right? In this case, you may be wrong if it breaks down under this area. This is I would call this a bull flag from our teaching, where the price moves up and then it moves sideways for a while. So you say, okay, I'm going to buy it at 221. I'm going to sell it $5 lower, right? Just for numbers. I am wrong at that point. Once you have those two numbers, then you decide your share size. So I'm willing to risk $5 a share. So you go in, you say, okay, how much money am I willing to risk on every single trade? And that will be part of your account size. I'll have something formal up for you once we know how big your paper trading account size will be. But it's usually like 1% of whatever the money is you have, right? You have $100,000, you risk no more than $1,000 on any given trade. So let's say you're risking 50 bucks. Then you know how many shares to take, right? Because I'm risking $5 a share. If I take 10 shares, that's my 50 bucks. And that's all I'm willing to risk. So you do all of this math before you're going to enter the trade. So you know on every single trade, give or take, roughly what your risk will be. And this is huge for traders, because every horror story I've heard about traders was, I was doing well, I was doing the right thing, everything was going great, blah, 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 blah. I entered a trade without a plan and I lost, 6 months or a year worth of what I was making in one trade. And this is what happens to most traders that explode. So if you sit down right now, and I love that I'm teaching people who don't already have bad habits, and say, on every trade I make, I'm going to make sure 100% that I know where I'm getting in, I know where I'm wrong, and I know what my size is to make sure that that risk is manageable. And it's just math, and just double check your math as it goes. And then the other thing I was saying is you just want to eyeball it and say, okay, if I'm risking 5, is it feasible I'm going to make 10? You'll never know for sure, but could this get up to, what's that, 231? Up here would be double that, would be $10 a share. You just look at that and you say, is that crazy? Well, not really. It's made runs like that before. And then you roughly know you're good with that, because you want to make sure that if you're right even 50% of the time, that you're still profitable with risk management. It is not the sexy side of things, but it is the only side that actually matters. So simple checklist, and that will be it, is market direction. Which way is the market going, right? What do I think the market's going to do next? Trend, right? Uptrend, downtrend, easy enough. Stock pattern, we saw this before, right? Is it your bull flag, bear flag, double top, double bottom? I can give you guys a sheet that shows all those. Actually, I will do that. I'm going to amend this document and I'll put it back in our little chat that has the candlestick setups and the patterns. So we'll have stock pattern, then candle pattern. You remember it was all the candlestick, the hammer, and the topping tail and the bottoming tail. Then do your math on your risk reward, enter your position, place your stop, and then just check it once a day, right? And do that whole checklist again. So every day, what do I think the market's going to do? Is the stock still in a trend that's working for me, right? What's the pattern? What's candlesticks that telling me, right? And every day you just repeat this pattern and you'll have a general framework. And then what you'll do is you'll start to add, this works for me, this doesn't. I tried this pattern 20 times and it didn't work at all. And I tried this pattern 20 times and it worked 15 times, right? So, don't do that pattern anymore. Do this one. And then you'll start to go from there. So that's pretty basic checklist. And whew, I talked fast. We're in a bit of time constraint. So I think I got through it. So does that make sense for anyone? Is there any questions? I will post this below, and what I'll do if I can figure out how is actually put it in maybe the video description wherever you're watching this, so you can go look at it. Just if you want to take this, and below again we'll have the chart patterns and the candlestick patterns. So just something to get you started. So again, next week I'm going to show you around the system. I'm going to give you 4 scans to go by, and then your homework is going to be to place a trade a day until we meet the next week, and you're going to talk about one trade, good or bad, and what you learned from it, and if you want me to look at it and give feedback, and we'll kind of be going like that. So I think this is where the learning will really stop, when it's not just me shouting words at you for a half hour at a time. So all right, guys, if there's no questions, everyone wait.